We'll move straight on to the next speaker. We've got David Swales here, and he's going to try and make sense of the long-term challenge ahead. Over you, David.
Thank you, Paul. Good morning, everybody. And certainly one of the terms I might be using a lot today is uncertainty. And while I don't have all the answers, my aim today is perhaps to explain some of the key challenges and opportunities as I see them for agriculture and also specifically for the cereals and oilseeds sector. I'm going to be covering quite a lot of ground today, and we only have sort of 25 to 30 minutes, so we won't be able to get into too much detail. So what I'm hoping to do is provide you with a bit of food for thought and also showcase some of the work which AHDB has been doing, which will hopefully add some value to you. So I'm going to cover three main things. I'm going to start with a bit of a brief background on the vote and what's happened and what's changed, what hasn't changed. I'm then going to focus particularly on trade issues, both trade between the UK and the rest of the EU and also globally. And here I think I'm going to be arguing that tariff-free access to the EU market is a really critical issue for the cereals and oilseeds sector. I'm then going to come on and talk a little bit about agricultural policy going forward. So the UK now has its first opportunity for a long time to set its own policy. And I think it's very likely that the nature of support and its structure will change quite a lot in coming years. So we'll perhaps look forward to see how that might happen. So I think just to set the scene then, I think as a result of the Brexit vote, we were all expecting lots of change. But actually what's happened is in lots of areas there's been very little change. We are obviously now all experts on the infamous Article 50, but even after this has been triggered, it's likely that the UK will still remain within the EU for at least for a couple of years. We also know that the Treasury has guaranteed funding in a number of areas, including agricultural support, until 2020. So there's quite a lot of things actually staying the same. And also, while there may have been an expectation for some that there would be an immediate bonfire of EU rules and regulations, we now understand that many of these are likely to stay in place. And depending on what type of trade deal we reach with the EU, they could be in place for quite a long time to come. So, in response to the Brexit vote, AHDB formed an internal task force to look at what we needed to do to shape our work going forward. And we decided quite early on that there was a key role for us to play in publishing impartial information and analysis to help our levy payers to make sense of the issues as they evolved. So we're doing that within our ongoing MI publications, and we've also launched a new series of reports called the Horizon series, which look at the issues in a bit more depth. I'm delighted that today I'm able to launch the latest version of the series, which looks at the UK's trade in agricultural products and the impact Brexit will have. Copies of this report are available in the coffee areas, and I would like to positively encourage you to take hard copies home with you, because if you don't, we'll have to carry them home ourselves. But the link is there to the website, and as further reports come available, we will be publishing them all on the HDB website. So hopefully there's more detail there if you want it. The reports we're publishing have tended to focus, or will be focusing, around four key areas. And these are areas where we've picked up from the industry perhaps some concern around what Brexit will mean. The report we're publishing today obviously has a very strong focus on international trade and looks at specific sector issues for that international trade. And our intention is to publish further analysis in the coming months and years, and we want that work to be very much driven by what our levy payers need. So if there are issues and topics which you want to know more about around Brexit, please feel free to contact me, and I'm happy to listen to your views. So we're going to start then on international trade, and I think graphs of exchange rates seem to be the flavour of the day, so I thought I'd put one in as well. And this clearly shows how the pound dropped dramatically on the 24th of June, and what's happened is it's remained at this this lower level, I think partly because of the uncertainty around the UK's economic outlook. I think this drop has created a little bit of a post-vote honeymoon period. It's obviously helped our export competitiveness, and it's provided quite a boost for some of the largest companies in the country in terms of their export foreign earnings. Farmers have also benefited as their single farm payments were based on the average exchange rate in September. So there's been quite a few windfalls as a result of this drop. Clearly, this is could be very much a short-term factor, so it's not all universally good news. And it could well raise the price of our imports, it could increase the cost of the supply chain in the medium and long term, and also raise prices to consumers. So I think some of these effects may well be short term. In terms of how things might change in the longer term, this model looks at, or this figure looks at the sorts of options which may well be available in terms of a UK-EU relationship when we do finally leave the EU. There's been a lot of debate about hard and soft Brexits. I think those are the key terms which are bandied around at the moment. As you can see here, I think there's trade-offs between the level of regulatory autonomy we have as a country to set our own rules, regulations and laws, and the cost of doing trade. So I think most of the discussion, we don't know for sure where we're going to end up, but my feeling would be we end up somewhere like this. Obviously the UK isn't going to choose a complete off-the-peg solution, but most of the rhetoric seems to suggest we're not going to remain within the single market, and we're going to be seeking some sort of trade agreement with the EU. So US and Canada are recent countries which have been discussing and setting up free trade agreements with the EU. So it's likely, I think, we'll end up in some sort of arrangement there. I imagine the UK government will be seeking probably a much more comprehensive free trade agreement than others which the EU has agreed, because free trade agreements are often quite limited in terms of the products they cover, and they do not eliminate all barriers to trade. There's often quotas in place, and there may well be tariffs still in place for many products. So exactly what that looks like, we don't know, but we think we're probably going to be looking towards the right-hand side of this chart as you look at it. That will enable the EU to set its own rules and regulations in certain areas. And what I would expect to happen is, over time, you would expect the UK and the EU's rules and regulations to start to diverge slightly. That will produce or increase our costs to trade for the EU, even if we do have tariff-free access to lots of markets. So, as our rules and regulations diverge, I would expect the EU would want to put in place extra checks and extra paperwork to ensure that the products they import from the UK are in line with products that they enable access to their markets for. So there's quite a lot of change going on there. And clearly, trade with the EU is incredibly important. If we look at food and drink as an example, and food and drink and agricultural products, there's around about £18 billion of food and drink exports from the UK every year. It's obviously a really important sector, and nearly 2/3 of that export trade goes to the rest of the EU. This graph shows how the level of imports and exports from the EU vary across a range of sectors. So we can see for cereals, over 70% of both our imports and exports of cereals come from the EU. So that relationship really is a critical thing. And we'll look at this later, but I would argue that tariff-free access, as well as access, is really important to the EU market. If we turn specifically to cereals, this graph looks at wheat and barley production, exports and imports over recent years. And we can see quite clearly that in most years, the UK is a net exporter of these products. In the most recent year, we exported over 5 million tonnes, or just under 5 million tonnes of wheat and barley. We'll look at the destinations of that in the moment, but I think the role of imports and exports here play quite an important role. The UK is very much integrated within the EU. and we do tend to import lots of higher quality, harder wheats for the milling industry, whereas we tend to export lots of feed quality products. So the EU relationship plays an important role in balancing supply and demand within the UK. Turning to those markets, so here we've got exports on your left and imports on your right. Sorry, I should have said, if you can't find the slides, they are hidden in your pack, but they are somewhere towards the back. So in terms of the trade, we can see there how key Spain is for our export markets, and I think it's over 80% of wheat and barley exports go to the EU. And Spain, I think, is a particularly key destination. Spanish buyers, I think, understand and have grown to know how to use and make use of our exports to their country. So it's kind of a very reliable and predictable demand we get from Spain. If we look at imports, the situation is probably a little bit more varied. So Canada is a really key country there in terms of imports, and we tend to import from them very high quality milling wheat, which is used within the industry. So it's a bit of a mixed picture, but certainly the EU plays a really key role in both imports and exports. If we move on to oilseeds, I think this shows quite a different picture. Obviously, oilseed rape we produce domestically, and you can see there in most years we tend to be a net exporter. I think this is data from last year, and we were quite a big exporter of that product. Again, those exports went entirely to the EU. Soya meal is an interesting one. We are very reliant on imports of soya meal from South America, and obviously that product is used primarily within our livestock sectors as an animal feed. And the EU does play a really important role here. So the EU does restrict trade to some extent and approves certain GM varieties which can come into the EU. So there's lots of question marks in terms of, well, what will the UK put in place to regulate that type of trade when we leave? As I mentioned at the start, I think tariff barriers are probably really key. In some of our other sectors, in the livestock sectors, lots of the issues tend to be around the sort of more technical end of trade, so the sanitary and phytosanitary type rules and regulations, animal welfare type issues. I think those issues are probably less important for cereals, and it's actually the tariff barriers which are really key. Now these tariff barriers are pretty complex, but within our publication we've tried to summarise them, and we've shown that here today. So the EU's basic approach, I think, is to enable countries to supply a small amount of product at a relatively low tariff rate, which might be sort of 12 to 16 euros a tonne. But then once we get above those relatively small volumes, quite a high tariff rate does tend to kick in. So you can see here, depending on the product we look at, that tariff rate might vary from 30% of 2015 prices all the way up to just over 60% of those prices. Now these tariffs effectively keep out cheap grains from the EU market. So there's a real risk here, I think, for our industry. So if the UK doesn't gain a preferential deal, and we're reliant on the sort of basic WTO rules, there's a real threat here that the UK could be exposed to these types of tariffs to enter the EU market. And given the volumes of our exports, I mean, these tariffs probably will prohibit trade to some degree, and we'll be looking for other markets for those grains. So we'll be out there competing with the Russias and the other low-cost producers to supply grain, and we would expect that could have a downward pressure on prices. Clearly, there's also a risk that the UK may impose reciprocal tariffs on EU imports, and that could raise domestic prices and particularly affect high-quality milling wheat. So there's quite a few concerns there for the supply chain in terms of tariff-free access to the EU. There are some positive opportunities, though, and Brexit could well force the UK to look a bit further afield. and there are many opportunities out there. So we all know about population growth and the 9 billion people by 2050. This data is actually from a study by the World Bank, which looks at what they term the growing middle class consumers, the global middle class consumers. So you can see here there's around 1.8 billion of these consumers within the world currently. And these are people who earn, on average, between $10 a day and $100 a day, which may seem quite low in compared to Western standards, but at a global level, that's the sort of income where people start to have a bit more disposable money to spend, so they can start to buy a few more consumer goods, cars, televisions, so on and so forth. And they also start to make some changes in terms of the food they buy. The forecast here shows that global middle class is expected to expand very rapidly. So it's going to grow by about 50%, going up to 4.8 million by 2030. So we're seeing really big growth. What you will note is that growth is uneven across the world, with a particular focus within the Asia-Pacific region. So, there may be opportunities elsewhere in the world for us to explore opportunities to export. Obviously, there's lots of opportunities here for our livestock and dairy sectors as diets change in some of these countries, but obviously this will also change the demand for feed grains as well, so there could be positive opportunities for the cereal sector. The EU has set up a number of free trade agreements with other parts of the world to facilitate this global trade, and that's shown on this diagram. At present, there's quite a bit of debate around whether the UK will or will not inherit a sort of share of these free trade agreements when we exit the EU. But I think most of the indications are that that's probably not going to be the case. So this will be a real challenge for us, particularly because the amount of time it takes to typically set up these free trade agreements. So, on average, they take sort of 7 to 10 years to set up. We know we've probably got just over 2 years, so that's going to be a real challenge, particularly given the UK hasn't really played in this space for quite some time. It's been an EU competency, and we've all heard the talk about the shortage of skilled trade negotiators, so I think this is going to be a really key government priority going forward. I think potentially the importance of these free trade agreements could be overplayed. They're obviously important and they make trade easier, but arguably what's more important is the myriad of technical agreements, which often are bilateral in their nature and sit below free trade agreements, and indeed in some countries we have them in place where there's no free trade agreement in place. So these cover off a whole set of technical issues such as sanitary and phytosanitary rules, and they ensure that we can access certain markets. So for example, we export an awful lot of seed potatoes to Egypt, we export fifth quarter product to China. So having these technical agreements in place, I think, is probably the immediate priority, as it will enable us to access markets, and maybe free trade agreements will be something which follows after this. The indications from government and the Department of Trade is that the UK is likely to adopt a very liberal approach to trade, and along with the opportunities that provides, I think we need to also consider the threats. So we need to be mindful of the impact on our domestic industries, and I would expect the government will be prioritising the issues of those sectors which contribute most to the economy. So we've heard stuff about the pharmaceutical sector, financial services, motor manufacturing. Are these going to be the sectors which the government focuses on in terms of setting up these agreements? And I think a key question for us will be, where does the sort of food and agriculture sector fit within the hierarchy of priorities? That might be something we need to think about going forward. So I said I was going to come on and speak a little bit about agricultural policy, because I think that's another key area for the future. So this graph looks at the degree of support, sort of public support, to producers as a result of agricultural policy from different parts in the world. So on the graph, the EU looks pretty much centre stage there, and there's obviously some parts of the world where there is much higher levels of support. I think it's highly unlikely that the UK will head in that direction. Obviously, those countries, probably they've got geographic disadvantages for their agricultural sectors, and also they tend to be quite wealthy countries, and maybe they can afford higher food prices in order to support farmers. I think it's unlikely the UK will go down that route. I imagine keeping food prices down is likely to be a higher political priority. So it may be that the UK starts to look for inspiration to some of the other countries to the left of the chart. So we know a lot about schemes in the US and Canada where perhaps more insurance-based models are in place. But I imagine it's something the government will be considering and looking about. Well, we've now got the opportunity to look at this policy for the first time. It's important that we recognise the importance of those support payments, and they do vary a lot in their importance by sectors. Jack mentioned earlier they're a source of huge resilience to the industry. This is data from 2014-15, and you can see there, if we were just looking at agricultural income alone, the darkest bars there, there's a number of sectors, including cereals in this particular year, which would have been loss-making were it not for public support and other sources of income. So clearly, it's really important we consider the impact of that going forward. And the government, I think, for a long time has maybe been dissatisfied with elements of the Common Agricultural Policy, and obviously we've been quite limited in the degree to which we've been able to change those things. We joined the Common Market way back in 1973, I think there, and then I remembered it's the year after the Russian Great Grain Robbery, and I remembered the year. But yeah, the key thing here is there's some dissatisfaction in government. Here's some select quotes, and you can see here the top two there perhaps show examples of people questioning the value to the taxpayer of particularly Pillar 1 payments, so the direct payments farmers get to underpin their incomes. So there's clearly some dissatisfaction around that type of support, but at the bottom we've seen some statements around the importance of support, so I think that is recognised. So I think the most likely outcome here is that the nature of support changes. We'll probably see a bit of a shift towards more outcome-focused measures, which traditionally have sat in Pillar 2 of the Common Agricultural Policy. So they might be things around agri-environmental schemes. There may be scope for more schemes to encourage the competitiveness of our sectors as well. But it's certainly interesting times. There was an interesting study published by DEFRA a few years ago now, which did look at what the impact of removing support entirely would be. And that's shown here. So we can see straight away that there would be a chunk of businesses, around about 15% across all sectors, who would no longer be viable. But then there's a bigger proportion who would potentially come under some financial distress and have to readjust their businesses quite strongly. The biggest impact we see here is within our livestock sectors, but certainly I think we would expect if support was to be removed or indeed reduced significantly, that would require some quite significant restructuring within the sector. Clearly that's very bad news for the sectors directly affected, but it could well provide opportunities for others. It may provide opportunities for new entrants or for existing businesses to expand. I think a number of farms, I've spoken to a number of farmers about this, and there are some out there who do feel there will be a bit of a sort of rise in patriotism as a result of the Brexit vote. And maybe, we'll be all saved. There's not the need for massive changes because consumers will just pay a little bit more for British food. So I thought it'd be interesting just to examine that very briefly. So firstly, I think there is probably some evidence that consumers are getting a bit wealthier at the minute. So this graph, I think the key bar here is the orange bar, which looks at what we call real earnings, so the degree to which earnings are rising quicker than inflation. And we can see we went through a really difficult number of years where consumers were getting worse off year after year. But in recent months, that situation has changed and consumers are now getting better off. So they potentially have a bit more money to spend. But as we heard earlier, the sort of economic outlook is very much uncertain at the minute. So whether we can rely on that continuing, it's difficult to say. The other aspect is, well, will consumers spend extra money on their food? And this is some data from IGD, which focuses on, this is grocery products, focusing on what drives consumer choice. And this does change a little bit over time, but it's interesting, over the last 4 or 5 years, the top few have changed very, very little. So when we ask consumers about what is it that determines what you buy, price nearly always gets the first mention, so it's a really key driver. And other factors may be coming much lower down the list. Now, this does vary a lot by different products. So if we looked at livestock and dairy products, it may be that sort of ethical issues come a little bit more to the fore. But certainly within the cereal sector, it's all about price and product performance. So I don't think we can rely on consumers being willing to spend more just because products are British. So my view on what that all means is that it's likely we're going to have to focus much more on being price competitive going forward, and the UK industry will need to compete much more on price and quality terms in a more open market situation. Now, I'm not at all going to talk about this because our next speaker is from Agri Benchmark and he's going to go through in a lot more detail, but I think for me the issues he'll be flagging up are very much key for the industry going forward. So we've galloped through there, and I'll leave you with a few conclusions. So I think at the beginning we spoke quite a lot about the trade issues around Brexit, and I argued that this tariff-free access is a really critical issue for a lot of our sectors and also cereals and oilseeds. We then spoke a little bit about the opportunities Brexit may provide, and certainly if we go down a more liberal approach to trade globally, that could provide a lot of really good opportunities for the industry, but it will also provide some threats, so we need to be mindful of those going forward. And finally, we talked a little bit about farm support, and here I think it's very likely that there will be a reduction in direct support to farmers post-2020, and that could well affect the viability of many farms within the sector. And as such, I think the key challenge will be how we can become more competitive to respond to that. Thank you.
Thank you, David. An awful lot of information yet again. We have time for one question, and there's one in the front there.
Just a quick one, David, on scenario challenges. Richard Whitlock, you painted that we would be more likely to be WTO plus as opposed to single market minus, which I would concur with that. And you point out the tariffs and quotas that we would be challenging. Obviously, they might run both ways on imports as well as exports, of course. So that will set up a whole new set of pricing and profitability for the UK food and farming industry. Have you done any scenarios that says, if therefore we have the burden of tariffs on imports and the burden of tariffs on exports, will that change UK farming, UK cropping? Because subsidies and taxes influence behaviour change, and so do tariffs and quotas. And should that perhaps be a consideration for your next project? Some scenarios based on that.
Yeah, thank you, Richard. I quite agree. We've not done detailed modelling, but it's certainly something which we've considered. So you're absolutely right. That change in relationship will be really key. I know that the NFU published a really good study just before the vote where they looked at a range of different options with regard to farm support and also trade. So there is some information already out there. But I think as the situation becomes a bit clearer in terms of where we're heading, I think that's something we would very much want to look at and model. And it's part of HDB's role, I think, to look at those things, provide the impartial evidence and information to inform both policymakers themselves and also the people in the industry who do lobby and push agricultural interests. So we very much see ourselves playing a role in that space.
Thank you very much. Thank you very much.